Today is Thursday, March 2nd. It is National Banana Cream Pie Day. What fun. Anyway, let's take a look at my market prediction or forecast, or at least outline framework that I talked about in yesterday's column for Barron's Online. And what I see, or what I saw on the SPY, the S&P 500 ETF, was a couple of gaps. Now first, let's just get a framework here. Here is what I believe was the trading range, the recent trading range of the last, say, 2 years. And this arrow here just measures the height of that range. I'm just going to take that, pick it up just for sake of time. Let's get this done right now. And a breakout from that range would give you that kind of price target for the S&P ETF. And let's put a price there just so you get an idea of the price, 244-ish. We don't have to be precise here. So that would be the breakout from this range. And here is a test and a little failure, but an acceptable failure. It's not too deep. And then there's the election rally right in there. So the upside target here is still not met using this measurement. And you can see that the channel drawn from the beginning of last year, parallel channel line, hits it in a couple of days, maybe 2 weeks or so or less. So that would say a little caution, maybe it's getting close to the end here. We look at momentum. You can see it's clearly overbought. That doesn't kill a rally, but it should put you on alert. All right, now what's that little red line creeping on the side? And this is what I was talking about in the column. What I did was, there's the breakaway gap before the election. And here's the gap for yesterday after the speech. Now we don't know if this is a continuation gap or measuring gap, or if it's an exhaustion gap. We can't tell from just one day. We don't know. We have to see what happens in the next day or two. What I did was I just measured the gaps. This is just eyeballing it from the middle of the gap to the middle of the gap. I just pre-drew the line to save time. And then what I want to do is say if that is a measuring gap, it usually occurs right in the middle of the trend. So there's the middle of the gap, and you see where that takes us. And again, I saved a little time here by drawing in advance. That takes us up into this area. Let's put a price on that. So 264, 265, just round numbers. So you see there's plenty of rally to go. And this is not to suggest the speed of the rally, the slope. It's just the price target. It's not price and time target. So there you have it. So either this is a reversal bar, reversal gap, exhaustion, or it's a measuring gap. Of course, it could be nothing, and that's also a possibility, but I don't have an analysis for nothing. Either it's going to sit there and nothing happens. Okay, you don't win money, you don't lose money. So, if I'm wrong and thinking that the 21,000 level on the Dow and right here where we are now on the S&P ETF is kind of an area where it might start to pull back. In case I'm wrong on that, this gap would suggest that kind of rally for the next couple of months. All right, let's translate this over to the Dow. All right, here's the same type of trading range, not quite as defined. Here's the arrow. I'm going to pick that up from the line, and you can see that the Dow is right there. It's around 21,000. All right, and just for kicks, this is the original chart I drew way back in December. Let's just make that nice. And I'm going to draw a parallel line to the 09 rally. And you could see, you could fudge where you're going to put this line, but that's close enough. So you can see that's kind of where I got the 21,000 number. So this would be an area of concern. Overbought monthly. Check this out. Overbought weekly. Overbought daily. I think you know where I'm going with this. So you got to see what happens the next day or two. So it's one or the other. I don't think it's going to be a nothing thing here.